This session is sponsored by Cluin. Andy and Heidi from Cluin are here in session. Cluin is a longtime sponsor of the AESC. Their executive search management software, Encore, is used by retained search firms around the world to help them manage their business development process and search execution all the way through the client feedback loop. They have a booth here in the event and welcome you to stop by during the next few breaks to challenge them with your toughest database software questions. Cluin is also offering a special promotion to attendees of this event. Schedule a demo of Encore with a Cluin rep before the end of May and receive an additional AESC member perk. It's my pleasure to introduce Dana Peterson, EVP and Chief Economist and Center Leader of the Economy, Strategy, and Finance Center of the Conference Board. The Conference Board is my alma mater. So excited to hear Dana's perspective on the C-Suite Challenge. Should you have any questions for Dana, you can submit them in the Q&A, and please do. And you can use the chat feature during session to share any comments about the session or connect with fellow attendees. Dana, over to you.
Thank you so much, Lynn, for the wonderful introduction. It really is a pleasure to be here amongst alumni of the Conference Board. Well, I'm here to share with all of you the results of our 2021 C-Suite Challenge. So the C-Suite Challenge is a survey that we conduct once per year where we canvass over 1,500 C-Suite members. And indeed, in this past survey, we canvassed 1,538 C-suite members. 909 of them were CEOs, and 92 of them were human capital executives. So these are folks spanning the globe. We've been conducting this survey since 1999, and indeed the AESC is a close partner of the Conference Board in conducting this survey. So when the survey comes to you next year, please be sure to fill it out. In terms of the timing, we actually conducted this survey in the latter part of 2021 in December, just following the US elections. So many of the insights are still relevant today, but there are a few that I might make comments on to kind of update us on where we are presently. So just high level, what were CEOs most concerned about for 2021? So we divided the concerns into the external environment, meaning elements or factors that CEOs, the C-suite, did not have direct control over, and then the internal environment where they did have control over those factors. And we basically show here the topmost concerns as well as the bottom, which is actually quite interesting. And so I'm going to discuss these in a little bit more detail, but I'm also going to share some key insights in terms of what CEOs believe are going to be kind of long-lasting effects from the pandemic, and also some key learnings from the pandemic experience. And as Lynn said, if you have any questions, please feel free to type them into the chat. We will have time once I'm finished presenting to answer your questions. So what were the high impact external environmental elements that CEOs were most focused on? Well, number one was COVID-19, which is actually quite obvious. And even now, 6 months later, after we conducted this survey, it's still a big concern on the minds of many executives. Indeed, how long are we going to be keeping our folks out of the office? Can we return to the office? When will governments allow reopenings in terms of mobility and lifting bans on travel? How long are we going to have supply chain disruptions? Are we going to see faster inflation? All of these questions are all wrapped up in terms of the concerns about COVID-19. Interestingly, back in December, many CEOs were still concerned about recession risk. And we think that's because at that time, the vaccines were not quite ready. In fact, we only had a few vaccines that had been approved and there hadn't been a concerted rollout. Fast forwarding to now, you have many economies that are actually accelerating their vaccine rollout, including Israel is the most prominent one, but the UK, the US, Bahrain. But still in all, when we look at the world, only 8% of the world has received at least one vaccine, and only 4% of the world population is fully vaccinated. So we still have a long ways to go, but certainly I would suggest that recession risks have probably lessened, just given the fact that we, as well as many other forecasters, are forecasting very strong GDP growth, both globally and for a number of economies, especially for the US, China, several smaller Asian emerging markets, but also the Euro area. Vaccine availability for COVID-19, again, was top of mind for many CEOs at the time. And indeed, it's still a concern, just given the metrics that I provided in terms of how many people have yet to receive a vaccine globally and the implications for businesses. I think also something that's very relevant is the shift in consumer buying behaviors. Indeed, over the last year or so, consumers have completely changed the way in which they consume things. Indeed, many consumers are focused on consuming goods simply because they could not engage in in-person services. But it was also the way that they purchased these services. Many of these purchased these goods and in-person services that you could enjoy at home. It was through online shopping. And indeed, many consumers previously had really just physically gone shopping, but now they've adapted to online shopping. Also, consumers are downloading things, they're streaming content, they are engaging in telework, they are engaging in telehealth. And so all of these factors were in existence before the pandemic, but were really accelerated. And businesses have had to shift their resources and also their business models to accommodate this new way in which consumers have been consuming and how we think that they're going to continue this shift online. And then also global political instability was a big concern. And we think that was a function, especially for the US and China, in terms of the US election outcome. Back in December, it was still quite uncertain. But even still, fast forwarding 6 months from then, we do know who the president is in the US, but there's still a lot of concerns in terms of the relationship between the US and China, what that means for trade, what it means for global supply chains, what it means for investment in intellectual property and how businesses can invest in both economies, and also what are the spillover effects to third-party economies. So I think all of these things in some form or fashion are still relevant. But again, the recession risk, we believe, has been limited quite significantly. Thinking about external environment elements that were low impact. At the time, back in December, businesses were not really concerned about inflation. Fast forwarding to now, businesses are very concerned about inflation. We're seeing inflationary pressures both for producer prices upstream, and also we're starting to see inflationary pressures for consumers as businesses are not able to contain all those prices and absorb them into their margins. And so businesses are trying to test their pricing power. And so we're seeing very strong prices for commodities that are filtering through the pipeline into consumer prices. Also, we're seeing higher prices for many in-person services that are starting to come back online. Indeed, in the US, just today, we received the CPI report that showed that airline prices spiked. Prices for used cars were very high. And these are things that, again, are a function of, well, certainly the used cars, the fact that you have shortages in chips and people are having difficulty finding cars and making cars. And so that's a function of the very strong demand for goods. But then with the airline prices, that's a function of rising demand for vacations, which is an in-person service, but certainly airlines have yet to catch up with increasing their capacity. So you're seeing these pricing pressures, this push and pull. And so that's very different relative to December. Also, we're seeing asset prices rise, certainly for housing, and that's a global phenomenon. And that's a function of very accommodative, very low interest rates, and also very high demand for people looking for more space. Indeed, many people have worked remotely, and some people are hoping to continue to work remotely. And so that's driven up demand for real estate and consequently all the inputs that go into creating housing and renovating housing. Volatility in energy prices. Again, back in December, energy prices were still subdued. But right now, we're seeing energy prices rise quite precipitously. Indeed, the Conference Board has raised its energy price forecast for this year for oil, anticipating that we could reach $70 per barrel. So that has implications for everything that consumes energy, from transportation to consumers to firms who are running factories, firms that need to move goods from one place to the next. So indeed, I would suggest that volatility in energy prices is probably much higher on the list of concerns now relative to December. Shareholder activism had a low impact, as well as concerns about accessible childcare and gender inequality. However, it is true, and you'll see in a slide that I have later, that many businesses believe that social issues and the views and the importance of stakeholders in pursuing capitalism is something that is actually here to stay. It is going to be much more prominent, much more important, certainly once businesses get past the shock of the pandemic. Now let's shift over to the internal environment. The top 5 focus areas of focus for CEOs were to accelerate digital transformation, and indeed, many businesses that were able to either affect social distancing or allow their workers to work remotely, or were able to automate, engaged in a lot of investment in digital transformation over the last year. And that's something that's probably going to continue going forward. Related to that, many businesses decided that they need to improve innovation, making sure that all their technology was up to date, and that they're thinking of new and inventive ways to meet the new ways, the new fashion in which consumers are demanding and indeed consuming goods and services. That required many firms to modify their business models, which can be quite uncomfortable, but certainly many businesses were very focused on that. Also, there was a big focus on lowering costs during the pandemic. Certainly, we know in the US, part of the cost cutting had to do with pretty sizable layoffs. In Europe, not so much because you had the furlough schemes, but still in all, many businesses found that they saved quite a bit of money on remote work, on automation, and also reducing business travel and reducing their office footprint. And so lowering costs was a big concern, and we think that just given what we're hearing from CEOs even now, just even conversations I had last week, is that lowering costs are still a big focus along the lines that I just mentioned. And then there's streamlining processes, so making sure that there aren't redundancies that can increase costs, and also reduce the amount of time that it takes to get the product or the service to the end user. So those were the things that were very high focus. Low focus, I'm happy to say, was reducing headcount. So, and again, this was a global survey, so it could have been the case that many firms may have already let people go, and they had reached a plateau in terms of how many people they were letting go. But at least but I also would like to look at this as something constructive and positive, that it meant that firms back in December were looking to increase headcount potentially rather than reduce it. Also low focus included decentralizing the decision-making process. So, big focus on decisions being made from the top, and everyone and communications being on the same plane. But certainly in terms of allowing lots of different groups and teams and stakeholders making decisions, it seems like that was not a focus. Reducing the environmental impact. Now that's interesting because I think, certainly during the pandemic, we saw that pollution rates just dropped globally because people were not out and about. People weren't going to their places of work. They weren't driving and engaging in normal activities. However, in terms of longer term factors, again, many CEOs believe that a focus on environmental issues is going to be something that is going to matter and something that they must focus on going forward. Enhancing corporate citizenship, again, while not a big focus during the pandemic, it still is something that CEOs believe is going to persist beyond the pandemic. And then accelerating inshoring of supply chains. Now, that's really interesting because one thing related to global political instability is the fact that there seems to be, at least throughout the pandemic, there was a greater focus on deglobalization, including shortening of supply chains and reshoring supply chains and building out more local infrastructure within your home country. And at least back at that time, businesses back in December were not thinking about that. However, they may be prompted to do so just given the fact that many governments, including the US, China, parts of Europe, are thinking about industrial policies around certain goods and industries for various reasons, including security, national security purposes, preparedness, competitiveness, etc. So that's the overview. So now I'm just going to go through a few more things with us before we open it up for questions. So again, external hot button issues outside of management control. Here are just some regional answers here, some regional responses. And you can see that for many of these regions, the top concerns were the same. So COVID-19, recession risk was still a concern, but vaccine availability, tax rates, especially in the U.S., just given the fact that the new administration, before it became a new administration, was talking about tax hikes, and certainly now we've seen a number of plans where, for example, the American Jobs Plan advocates spending on infrastructure and R&D and manufacturing, and all that being paid for by higher taxes on corporations. But also regulation was a big issue in the U.S. as well as in the Gulf. And global political stability was very prominent for China, just again, given its challenge relationship with the U.S. But all in all, I'd say that many of these factors that CEOs believe were important were pretty universal globally. So we think that certainly there was an election effect for responses, especially among U.S. CEOs. They were less concerned about global trade and political instability relative to our prior surveys. But rising concerns did include corporate tax policy and regulation. That's consistent. I would say that those concerns, certainly with corporate tax policy and regulation, those concerns are still quite prescient now. Concerns about global trade, I would actually say probably have increased since December. So just here's a breakdown, an interesting breakdown of responses between human capital executives and CEOs. For the most part, the top concerns were the same among those executives, but clearly CEOs had a lower priority in terms of things like stakeholder capitalism and also social justice issues, as well as labor force skills. So it's quite notable that that you see this differentiation. But still, Mal, as I mentioned, that some of these things that CEOs ranked as being low for this year, they do believe will matter in subsequent years. So let's talk a little bit about the internal strategy focus. Again, regionally, accelerating digital transformation ranked in the top 6 for every region here. So also improving innovation, lowering costs, cropped up quite a bit. Interestingly, employing in mergers and acquisitions ranked very high in the US. And that we think is consistent with the fact that many CEOs believe that larger firms will have greater access to capital markets relative to smaller firms, and that these larger firms, especially the superstar firms, have the ability, the capability to capitalize on the shifts in technology and the way that consumers are consuming whereas smaller firms that have not invested in those areas are vulnerable. And while they still have value, they would become subject to mergers and acquisitions. But still in all, again, you can see that modifying the business model was something that was also very important among many regions. So this next slide includes CEOs, human capital executives, and CFOs in terms of their ranking for what was most important in terms of the internal strategy focus. So again, accelerating digital transformation was either number 1 or number 2, followed by improving innovation, modifying business models. Lowering costs was also something that was quite important, especially for the CFOs. And here we just have the breakout by different industries: manufacturing, financial services, and non-financial services. And again, there's a lot of synergy. There's quite a bit of synergies across these industries in terms of what were the most important factors. But interestingly, for non-financial firms, they were concerned about streamlining processes, but they were also very much concerned about modifying their business model. Again, just given the major shifts that the pandemic brought on, either through interruptions in globalized supply chains or the ways in which households are changing their consumption. So let's talk about the long-term legacies and lessons learned. So I've mentioned this a couple of times. Here's a slide. And so here we can see each question is independent, meaning they're not related to any other question. And essentially, most CEOs, 74% of them said that reducing business travel was the top legacy from the pandemic that they think is going to persist. And that's quite relevant, because that means that that there's going to be a fundamental shift in the way that companies do business. No longer will they be sending their employees around the world to engage with their customers and their clients, but they're going to engage through technology. And that businesses have realized, at least during the pandemic, that in some ways they're just as productive. However, there's still questions around whether or not people were actually more productive. Was it just the case that there was a recession, they wanted to keep their jobs? And also, was that productivity at the cost of really eating into personal time, and people are on the verge of burning out? It's not clear, the jury's out, but still in all, businesses are saying business travel is a function, is something that we're going to economize on. Also, many businesses after that, many CEOs said we're going to be automating more tasks. So there are cost savings there, as well as productivity, efficiency enhancements. As I mentioned, large firms are expected to have better access to capital. Also, with regards to supply chains, the big focus on making supply chains more resilient. So integrating them, diversifying them, maybe making some of them closer to home, or even building out localized supply chains closer to the customer. So there's a big focus on that. But as I mentioned, climate change focus will increase for many of these CEOs. Many CEOs believe that remote work is here to stay, as well as smaller office spaces. There's also an expectation that at least more than 50% of businesses believe that addressing social issues is really going to be important. So these are all the things that that were top of mind in terms of longer-term legacies from COVID. And so here are just some of the lessons that CEOs had relative to their own countries regarding lessons from the pandemic. So, for example, many believe that flexibility was important. Managing crisis management was important. Keeping calm shows up quite a bit, but also not wasting the opportunity to make big changes amid the crisis, and also acting quickly. So being proactive as well as being proactive were very important lessons learned. among these CEOs. So what comes next? There are essentially 7 big key takeaways from the survey. Back in December, business leaders did believe that there was light at the end of the tunnel, that the pandemic was going to end, that we were going to return some semblance of normalcy. However, amid that, it meant that it required a great deal of adaptability, flexibility, grace under fire, and also an incredible need for speed, otherwise falling behind. But also this was an opportunity to engage in transformation and really to invest in talent and consider the longer term impacts. So I think my time is up, right, Lynn?
We need an hour, and I hate that we have to end, but we also have so many questions. So I wanted to get at least one question in, if we could. I'm going to start here. So surprised to see gender inequality as low impact. Why do you think that's the case? And what about the broader aspects of DEI?
Sure. I think, heading before the pandemic, we were starting to really see a big focus on DEI and gender issues and inequality. However, many businesses thought it something that was nice to do as opposed to an imperative. And then the pandemic hits, and then all of a sudden anything that was, not a business imperative gets pushed to the side. But I think what we saw, many people call the pandemic the she session or the pink recession, because it really impacted women globally very hard. Many women work in the in-person services jobs that were shut down. Many women are faced with having to care for dependent adults and children. And so when schools closed, women found themselves in a bind, and many women have dropped out of the labor force. And we're very concerned about women reentering and women being able to catch back up to what was lost over the last year. So I think, unfortunately, it was not a focus during the pandemic, but businesses, CEOs do recognize this is something that we do need to focus on post-pandemic in order to be viable businesses and to grow, frankly.
Incredible. And, Dana, I think if we have so many questions, I'm going to try one more. And have a shorter time to answer, but a member has asked, given the increase of ESG in the boardroom, why do you think it is reflected as low impact? And that's gender inequality, environmental impact. So if you could just answer that in a minute, that would be great.
Sure. I think, again, ESG was something that was nice to do for a lot of firms. And so it fell to the wayside along with DEI. But it's going to be so important. Stakeholders, customers, even shareholders care about these things. And so these are longer term legacies that will probably pick up steam after the pandemic.
Wonderful. Well, it has been such a pleasure. I really appreciate having the opportunity to have an alumni of the conference board here with us again and to continue our legacy of having a conference board speaker at our conferences. So thank you so much, Dana. And I want to remind the audience that this session will end and there will be a break afterward. I want to thank Kluin for sponsoring this session. And again, Dana, thank you so much. Really appreciate your contribution.